Despite Kellogg's slow sales growth in the first quarter, the company says its February acquisition of Pringles is the spark it needs for strong growth going forward. Matt Arnold is the consumer non-cyclical analyst at Edward Jones, and he has a buy rating on the stock. Matt joins us now from Des Peres, Missouri. Matt, welcome back to Bottom Line. Always a pleasure to have you on.
Good to be here.
Matt, Kellogg, how badly was it hurt by the sovereign debt crisis in Europe?
Well, that's definitely a piece of the issue. Europe is a really soft environment for a number of companies, Kellogg included. I'd also point out that the environment here in the U.S. is also pretty challenging. Consumers are kind of pushing back after some relatively sizable price increases by a number of companies like Kellogg over the last 12 to 18 months, and they're buying fewer volumes.
Matt, will Kellogg raise the prices to counter that weakness?
They certainly have, and that's why there is some softness in volumes purchased by the consumer. I think the good news is over the next couple quarters we should see that need for price increases kind of taper down, and as that happens, we typically do see the consumer begin to get used to the new higher prices and buy greater volumes again.
Well, given that most people now eat breakfast on the go, talk to us then about who is Kellogg's target demographic.
Their target demographics all across the board. I mean, they do make a number of products that are kind of the convenience play, but traditional ready-to-eat cereal still is a hugely relevant category among all age groups. So I wouldn't count out the cereal category. It's a very low-cost and nutritious meal serving, so it's been an area that can grow over time. There are soft periods like the current one, but I would not count out the category or Kellogg.
Well, as you know, just 3 days ago, Kellogg said that its board declared a dividend of 43 cents. Plans were announced to raise the dividend by a penny beginning next quarter. What will the reduced earnings forecast mean for dividend payments going forward?
Oh, there shouldn't be any issue with dividend payments. The company generates plenty of strong cash flow to fund that dividend and do other things that are positive, like buy Pringles, which is a very nice use of capital that should serve as a growth engine as well.
Yeah, you did mention Pringles, that deal in February, the agreement, it was for nearly $3 billion in cash. Kellogg's attempting to ramp up its global snack sales. Will today's announcement affect those plans at all?
No, not at all. This is a long-term play, the pursuit of Pringles and growing the snacks business. They already have some good snacks brands, Keebler included, and this should be a move that should help to continue to add to the business. Most people don't realize it, but Pringles is 2/3 international, so
right.
This is a nice global play.
So global play in terms of, guess people who might not otherwise see Kellogg's products will see some snack products when they go to the store to shop for something else. I guess this is more a question of subliminal persuasion, if nothing else.
Oh, and the other thing I'd point out, I mean, cereal is key to the company, but over time this will actually even out their category reliance to almost half and half between snacks and cereal. So it gives them a stronger presence in a number of different new aisles of the grocery store and helps to diversify out the revenue stream.
Matt, you know we've been seeing a lot of pressure in commodities lately. How's that going to impact Kellogg's bottom line?
Well, right now it's weighing on it, but the good news is we're actually seeing a number of commodities that are actually down year over year. So over time there could be some relief in store, and importantly, it's not just relief for these companies, it's relief for the consumer. The consumer's being stretched right now by these higher prices, so just a pause in inflation in food would be a welcome thing for the consumer right now.